My name is Mohammed Ashik and my roll number is 32. Today I will explain the topic of inventories. This video I will explain the topic about inventories and the types of method to calculating inventories and explain first in first out method and solve one problem in first in first out method. Okay, what is inventory? What do you mean by inventory? The term inventory means a complete list of items such as a property, goods in stock, or the contents of building. The term inventory defines the term inventory defines the complete list of items such as a property of the firm or goods of the firm. It's called inventory. In the case absence of inventory, the firm or a company go to the way of loss. The time is 4 o'clock. Okay, I will explain about what the methods of calculating inventory. There are 5 methods to calculate the inventories. The very first one method is the retail inventory method, and second one is the specific identification method. Third one is first in first out FIFO method, and fourth one is the last in first out LIFO method, and the fifth one is the weighted average method. Okay, these are the methods for calculating the inventories. I will explain detail about the first in first out method and solve one problem also. The term first in first out means first purchase it's go first out. Okay, the term FIFO assumes that the oldest product in a company or firm's inventory have been sold first and goes by the production cost. The main example of FIFO method is perishable goods because the goods is perishable in nature. Example vegetables, meat, etc. The common businessman also mostly follow the FIFO method. Okay, let's go the problem. From the following particulars, prepares stores ledger account under FIFO method of pricing issue. 2019 Jan 1 opening balance 50 units rupees 30 per unit. Okay, Jan 5 issue 20 units. Jan 7 purchases 48 units at rupees 40 per unit. Jan 9 issued 20 units. Jan 19 purchases 36 units at rupees 35 per unit. 24 received back 10 units out of the units issued on 9th January. And the last one is 27 issued 15 units. Jan 27 issued 15 units. That okay, let's solve the problem. The title of the problem is stores ledger account under FIFO method. Okay, the tabular column divided into 5 parts. First part is date and second one is particulars, third one is receipt, fourth one is issue, and fifth one is balance. Okay, what is the first transaction? Opening balance of 50 units at rupees 30 per unit. Okay, made the entry in a particulars 2019 Jan 1. Opening balance is equal to quantity 50 unit rate rupees 30, total amount 1500. The second entry is issue of 20 units in Jan 5. The second entry is 5 issue. In issue column 20 units issued at the rate of rupees 30. At the rate of 30, 600. Deduct this 50 units minus 20 is equal to 30. 1500 minus 600 is equal to 900. Okay. Third entry. Jan 7 purchases 48 units at the rate of rupees 40. Made the entry in a particular column. Jan 7 purchases. In the receipts column, they received 48 units at the rate of 40. Amount is 1920. And they move the balance column 48 units at the rate of 40 and 1920. The fourth entry is issued 20 units. Okay. At the date of Jan 9. Jan 9 issue 20 units at the rate of 30. They must issue the first one because this is a first in first out method. 20 units issued at the rate of 30. 20 into 30 is equal to, the amount is 600. Subtract 30 minus 20 is equal to 10. At the rate of 30, total 300 units. Okay. And 48, 40,920 follows. 19 Jan purchases 36 units at the rate of 35 per unit. Jan 19 purchases 36 unit, rate of 35, and the amount is 1260. And enter into the balance column. That these two are followed in the next column, and the new one is 36 units at the rate of 35, and the total amount is 1260. Okay. 24 received back of 10 units of the units issued on 9th January. The units issued on 9th January is 20 units. In that 20 units, they received back because of some defective of goods, damage of goods, anything else. They returned to the company or a firm. Okay. Received back means they received a goods. Okay. This entered in the receipt column of stores ledger account. Enter the transaction date is 24. Received back 10 units. 30 rate is 30 because they issued 9th Jan, the rate of 30. Okay. Received back 10 units at the rate of 30. Amount is 300. And they enter in the balance column. These three are continue, and last two new received is 10 units at the rate of 30. The total amount is 300. And the last and final transaction is 27 Jan 27 issued 15 units. Okay. Jan 27 issued 15 units. Okay. The balance column, they issued first 10 units at the rate of 30 rupees. Okay, first 10 units at the rate of 30 rupees. 10 into 30 is equal to 300. And another 5 units issued at the rate of 40. 5 units issued 40 is equal to 200. The balance is 43 unit at the rate of 40. The total amount is 1720. Then 36 units at the rate of 35, 1260 units. Then the last one is 10 units 30 at the rate of 30, and the total is 300 unit. These are the closing stock. The closing stock valued at rupees 3280. The problem is solved. Okay, these are the method to calculate, to solve the sum of FIFO method. Thank you.